Sure. I'll start off with roles in corporate banking. So, typically, when you start off a career in corporate banking, there are broadly three roles that you can do. One is the relationship manager role. So, the relationship manager's role is typically the front end. You are the face of the bank for a client. Let's say that if you are a relationship manager and you handle the relationship for the Tata Group, anything that somebody in the Tata Group wants, whether it is a cash credit, an OD line, a project finance, or a structured lending, he should pick up the phone and speak to you. Thus, it's really important for you to develop that relationship with the client, not only at a business level, but also at an individual level, wherein you understand what are the pain points that the organization and the team as a whole is going through. So, what your typical responsibilities are related to sales and budgets. Very early in your career, you will start becoming responsible for sales targets, for meeting budgets, because this is what drives the business. Typically, your targets are split into two parts. One is getting business from existing clients, so that is deepening your entire portfolio, getting a bigger share of wallet of the banking that the client does. And second is also to get new accounts. So assume that I'm handling the large groups for the bank and I have the Tata group, but the next target should be I'm handling five companies within the Tata group. By the end of next year, I should be able to get 20% more revenue from these five companies. Plus, I should be able to add three more companies of the group in the portfolio. So it's not only minding the relationship, but it's also getting new business. And that's where the business development comes in. And then there is client servicing, which is extremely important. And this is what gives stickiness of a client to the bank and to you as a relationship manager. So assume that you're handling the salary accounts, which also might be part of your product portfolio for TCS. And the CFO salary hasn't been credited. And I speak this out of a live example. The CFO salary has not been credited. It should have happened at 9 a.m. It is 11 a.m. So the entire treasury team is panicked. So they pick up the phone, and it's then your job to ensure that the client is serviced well, the resolutions are done in time, and at the end of the day, you have a happy client. Because if that does not happen, the next deal will not be yours. And client servicing is also what makes you an invaluable resource to a bank, because assume that you are an ICICI and you have a very good relationship with, let's say, Nilkamal, which is a mid-market company. Tomorrow, if you decide to go to HDFC, if you've been able to develop a good relationship with the client, you will be able to get more business for HDFC from Nilkamal just by the virtue of being a strong relationship person. That's typically about the RM role. Then we have the credit analyst role. So a credit analyst's job is to, as simple as that, do the credit analysis. It's really about understanding risks. And often what happens is people who are good at finance believe that risks are only financial risks. But when you're looking at a company in a holistic perspective, it's not only financial risk, it's also the non-financial risks that we're talking about. So it ranges right from what is happening in legal policies, what is RBI doing, how is the company's business structured, if it's in different geographies, it's a geographical codependence, and you link all this to the financial numbers, the P&L, the balance sheet, and the cash flow, and you come up with what is the risk perspective that you have. Now, especially in this day and age where defaults are really becoming a common occurrence and banks are struggling with NPA, a credit analyst job becomes even more important because decisions to lend, decisions to price a loan are based on what output you throw up as an analyst. You always have systems and processes and models which are run by banks to help you. But typically, these things will always process quantitative things, and qualitative judgments like the kind of impact you think policies will have on a business, the kind of factor, geographic factor, distribution, export import, all that kind of gets valued in by what an analyst has to say. So that becomes a very important role, and it's becoming even more important these days. Besides that, as a credit analyst, you should also be able to understand the legal and the documentation risk. So, as an analyst, you will typically go through few documents. You will understand which are the clauses which can impact liquidation, which are the clauses which can make the entire deal stronger, protect the bank in case of certain eventualities. So that becomes your job as well. The main factor which distinguishes an RM and a credit analyst, firstly, the RM has more of a sales role, the analyst has more of an analyst role. And secondly, it's your personality type. So somebody who's an RM would like to do more of front end, people talking, sales kind of role. Somebody who wants to be a credit analyst probably is the kind of person who likes to deep dive into things and do more of analysis. That being said, you cannot be a good RM if you don't understand credit. So even if you like sales, it's very important to be comfortable with credit with sales.
Sonia, just one question, if I may.
Yes.
I understand that in some banks, the two functions are separate, that is RM and credit, but that in banks like ICICI Bank, it's a single role. Is that correct?
I wouldn't know
That
about
the RM does actually also prepares the CAM. Sorry to interrupt. Okay.
Yeah, no, I'm not sure only about ICICI, but it does happen on lot of banks as well. So the RM prepares the CAM, and which is where I'm saying that it's very important for the RM to also understand credit principles, because if the RM doesn't know what the credit and what risk is all about, he's never able to price a product well and hence be able to sell it properly. So that the function is merged in some banks. Typically, as seniority grows, the function starts splitting. So maybe the first 3 years might be the same thing, and then later on it splits into maybe RM plus credit and risk. So those who actually like to do more of analysis, then start moving to a risk vertical, which looks at the analysis and takes a decision.
Right. Thanks.
And then the third role is the product role, wherein you deep dive into a product. So you could be an FX product person, which is there part of the team to structure a product, or you could be a product salesperson who is helping the RM by offering a specialized support in terms of sales. So the product role will have various verticals depending on what the bank likes to develop as its verticals. You'll have cash, you'll have trade. Some banks have cash and trade merged and call it transaction banking. You then will have your FX. You might have a specialized structured debt system as well. So your product team is basically somebody who will support an RM and be able to offer specialized input, because an RM becomes a champion.